Hi, welcome to this video today, which is an interview with one of the traders from our Facebook group, Mark. Highly successful price action trader. Now we're going to chat to Mark in a moment. If you actually are new to our videos, you can actually join our Facebook group on the link beneath this video. You can also get more details on Mark as well. Now, in terms of Mark's trading strategy, he's going to outline it in a moment. It is very, very simple. He's also just going to show a quick trade setup as an example of what he does. And a lot of people might be thinking, that's too simple to work. It's highly effective, and Mark has been really successful with it. Really consistent results, big gains, and really not too much drawdown. Now, one of my beliefs about Forex trading is that traders tend to overcomplicate charting. They look too much at past history and all the twists and turns and try and spot patterns and so forth that really aren't going to help them make money. Now, in terms of trading should be very, very simple. The less inputs that you've got into your strategy, the better. Okay, right, now I'm just going to go and chat to Mark on what he believes about trading. He'll outline his strategy, do a chart setup, and you'll see something that is simple but very, very effective. Right, let's go and chat to Mark. Now, there is a phrase, and I'll just let you answer it. A lot of people say, if you really want to make money with your charting, you just keep looking left and focus on what happened before. That's going to tell you what happens next. What do you say to that?
Well, for me personally, I found that, with consistent gains, I have no need of the room to the left or the indicators or the bat patterns or trend lines or anything of that nature.
Okay, so the thing about your trading, is you don't use double tops, bottoms, anything like that at all. No trend lines, nothing, yeah? Now, in terms of what we're going to discuss today, not your longer term trading, which I know you use the COT. It's a longer term, different type of trading. I want to focus on your short term swing trading. Okay. Now, in terms of, there's only three things I believe that are important to you. Volatility, volume, momentum. Okay. Explain why these three things are the only three things you focus on.
Well, in the first, when I first started trading, I sit around and I would look at pairs and I would like, what's happening with this pair, and I quickly discovered that there was just pairs that there was just nothing going on. So after a period of time, looking around and found a couple of different things that worked for me, but just one thing that I used, that sort of really started giving me results was actually an indicator that I've found all over the web, but my broker has one that's free for me to use. It's a sort of like a volume or volatility indicator that shows what's moving, basically.
Okay, so basically, if I'm correct, the indicator you've got is going to show the pairs with the most interest in them, the biggest daily ranges, that sort of thing. Is that right?
Yeah, it's just where the traders are. That's where you first I try to locate where's the trader at in the current day.
Okay, but in terms of picking out the pairs, first of all, you use a volatility tool. Okay.
Yes.
And I know there's quite a few of these online, but I just want to make sure I've got it correct if anyone wants to go and get one. It will normally just give you the pairs with the biggest movements in the day, yeah?
Yes.
Is that correct?
That's correct.
And then basically you can see, GBP USD is the most volatile today, or Euro SEC is doing nothing, or something like that, okay?
That's exactly right.
Okay, so you got to the volatility indicator. You've looked down the pairs. You will, in your watch list, so to speak, you'll pick out the pairs that are most volatile, yeah?
Yes.
Okay, now once you've got the pairs that are most volatile, you're going to go and trade some of them, or a few of them, or whatever, yeah?
Yes.
Now, tell me, if you could, just how you actually execute a trade. Yeah, what you look at when you look at the chart that says to you, right, I'm going to go for this.
Yeah, I mean, basically, I just look at the, like I said, I get a judgment based on, you know, the move, you know, where the moves are first, and then I sort of write that down, and then I go over my, you know, my overall plan for a longer term, because my longer term can give me some of the insight of my shorter term as well. I can trade, definitely trade pullbacks and things of that nature off my.
Okay, but just I understand. Obviously, it all goes into a plan, and you know the trades are picked out in that way. But excuse me, how do you actually say, right, that is a setup that I want to trade, I'm going to enter it? What makes you decide to do what you do and how to do it?
Well, if I have movement in that pair, and you know I don't see any, you know, I don't see any breaking the momentum, then I just find my area where I want to place my stop, and I'll just look at to see what in that pair. I want to see how much that pair will be risking. If it's beyond my risk and reward, then I won't trade it. I'll wait until I have a better risk reward. It's all based on my risk reward, how I, you know, how I'll pick them out. You know.
Okay. What I want to try and, if you could put it into, you know, sort of a step process. Okay. Understand. Obviously, you place a stop, or I know you work from the stop first of all, and think, you know, that is my starting point. Then I'll decide the entry. Yeah. But let's say.
Exactly.
Let's say you've decided to stop, you decided the risk, it's in your favour. How do you actually know that you want to trade?
Well, if I'm looking at a pair, and I love continuation trades, and also love reversal trades, but continuation really is what I'm really looking for initially. So when I see a pair that's stalled after a lot of momentum and a lot of volume has been in that pair, and I don't see it leaving, then I'm anxious to be keeping that at the top of my watch list and looking for areas at that point to make my decision where to execute that trade.
Okay, so you've got a strong move in a Forex pair, yeah? Mm-hmm. It stalls. Are you saying when it stalls, you then want to think, right, okay, if it picks up momentum, I want to come in?
Yes.
Okay, now, in terms of a stall, okay, what sort of stall do you look for?
Well, when you see, I
know. Obviously, there's probably many facets of this, but what I'm assuming is you see a price move, it stalls, you've decided where the stop is. So I'll ask you how you do that in a moment. But how do you decide when the stall is over and it should continue? Because if it's stalled, obviously it could come back as well.
Yes, it don't really concern me about how long the stall is going to last or anything of that nature. Basically, all I'm concerned with is at the stall point, because whenever price stalls, what I've come to know is that that's typically a place where orders are going into the market, and that's where they're deciding where the orders are going to go in for buys or sales. And so at that point, I'm really sort of clarifying. It's sort of already been clarified to me that that's a point of order flow. And so what I have to do is I have to decide, am I going to go with the current continuation of momentum, or am I going to try to look for reversal or pullback?
Okay. Well, in terms of this, how would you decide? What would really sort of think to you, yes, this is going to be a continuation?
Well, if you have a volatility or volume that's been indicated, like my volatility tool or volume tool that my broker uses, it actually tells you, more so that there's a lot of volume in that pair. Unless I see it start to slow and move to the other side, I'm going to be looking for a continuation. I'm not really concerned with any kind of support or resistance lines. I'm not really concerned with any supply and demand at that moment. What I'm looking for is I'm looking for that area to place my stop for low risk, because if it's not correct, I'm out with a very small stop. But if it does go correct with a continuation, then I'm looking for big gains, 3-to-1, maybe even sometimes 6-to-1 reward.
Okay, so in terms of your risk reward, you're aiming for 3-to-1, 6-to-1 even. But just one thing I was going to stress, because I know that you do this, it's very dynamic, isn't it? So if the trade keeps running, you might even go for a higher gain above your risk, so to speak. Would that be correct?
Yes.
So
yes.
Sometimes it could be like 10-to-1 or whatever. You just follow, well, hopefully
yes.
follow the movement. Okay, in terms of just the way you do it, very briefly, just we're going to give an example, yeah? So let's just go and pull up a chart and take a look at one sample trade setup. One of your charts. And I'm sure a lot of people looking at it will think there isn't much there to work with. You've only got, what, 15 to 18 candles?
Yes, that's plenty enough.
Okay, so in terms of just to clarify, you just don't look left back any further, no?
Nope, I'm working strictly off current price for probable trades, probability.
Okay, now in terms of this, you've looked at your volume volatility indicator, yeah?
Yes.
And I'm going to guess at what you're doing, yeah? And you tell me if I'm roughly correct. You see two sort of positive candles, which are your black candles, yeah? Quite big, with two whites in between, yeah? And then obviously you come up with a smaller black. That candle's getting smaller, yeah? Then the white candle's pretty small. The black candle is pretty small. You've got a tail, which comes back and we finish negative. So I'm assuming you're thinking that's exhaustion. And the three candles, they're small because of the buyers and sellers are congregating. Would that be correct?
Yes, Andrew, all those things and then more so.
Yeah, I mean, just in broad sweep.
Yes.
So obviously when the candles get small, I'm assuming that, that's sort of, the buying and selling is drying up for a moment, yeah? And then it's obviously going to go one way or the other. And you've decided to go, obviously, with the move to the downside. And it's obviously
correct.
The volume and volatility picks up after the black candle, which you entered on. So you basically seen the volume come in, if I'm correct, and then you've got the big two whites, yeah?
Yes. I'm looking strictly at current price for what's going on right now on the current price, and what I see. When I'm looking at that particular current price on that bar or candle, I make my decision based on all the other parameters that I have in place.
Okay. Now, one question I was going to ask is, you've got a first target down the bottom, but there's nothing to the left at all.
No.
How do you decide that's your first target?
I actually have a tool that I have set my own parameters in that actually has helped me out a tremendous amount with that. And it's not a too conservative target tool, a target parameter for me. So I have decided to continue using it because it's a very rewarding method.
Now, in terms of the risk here is very, very small.
Yes.
Because you're literally going right behind the tail. So I think we said it earlier, but just in case we didn't, it either runs for you or it doesn't, basically.
Exactly.
So if the orders do not come in and force the price, that doesn't matter. You just get taken out on stop. But you can do this actually a lot of times and get stopped out because you've got a really good risk to reward.
Yes. But I guess you could say, if you look at just this example in its, in its simplicity,
Yeah.
you actually can do the math, and you can see how many you would have to lose just to have one if you had one gain.
Yeah. No. I mean, I can see that you can have quite a few losses, and one good trend pays them for them all, as Ed Sakota says.
Yes.
So this is just a typical setup. Obviously, we just got over it briefly, but it's all to do, as you say, with the order flow behind these candles when you look at them. Yeah.
Yes.
Okay. What I want to do now, if it's okay with you, let's just chat a little bit about order flow and how it works. Okay. That's a very, very minimalistic chart. Very different to, I'm sure, what most people believe about technical analysis that works. Can you just explain how you got to that way of trading?
So it's like I was talking about before, Andrew. I've been at, trading. I'm a sort of a social type person. So I talk to people, and I try to find the people that really have not had knowledge, and I found a few people that were actually, one guy was a retired floor trader, and listening to them discuss things over the years, I found out that they didn't have the things that most retail traders use whenever they were trading on the floor. They didn't have the indicators and the charts and things of that nature that like we have nowadays. And I started to really sort of trying to pinpoint, when I heard them talking about price, it just sort of clicked, price, current price. And then, after testing and, sort of, looking at my notes, started doing things with the current price and really started honing in to better results. And then I actually found something that gave me better results, and I knew it had to do something with current price then. And now, that's what I've been working on. I've been honing in on the current price.
Now, in terms of floor traders, obviously they didn't work with charts. They worked on volatility, volume, and momentum, really. So really, what you put together is something like a floor trader's way of trading on the internet, for want of a better phrase. Because in terms of your charts, very simple, but you do have that eye all the time on the volume and basically looking for the volatility to move up as the orders, how would I put it, push direction. Would that be right?
That's correct.
So the actual charting is very simple, but it has to be done in association, obviously, with the volatility and volume and so forth. Now, in terms of, I think, most people, they would find it very difficult at first to do that sort of way of trading because it's just too simple for them. There's just not enough information, Mark. We haven't got any we've got no Fibonacci, Elliott wave, anything like that. It's just
that's exactly right.
Now, in terms of one thing that I think is interesting about your way of trading, because you only look at so few candles, yeah? You can't see, how would I put it? If the price has moved in a big trend, and you might think it would reverse if you were looking at, let's say, 3 months or whatever, you've only got a few bars to focus on. So
yes.
A lot of people who look at the bigger picture will anchor the price, so they want a better price all the time.
Sure. So they'll be looking at the trend, the higher lows and higher lows and the lower highs, and it's you know what I'm talking about.
Yeah. So you're just focused in the moment at what's going on now, and just trying to work out where that big order flow is going to go.
Current price, it dictates my movement, because oftentimes what you'll see is, even the best higher highs and lower lows traders that I've met, they actually miss a lot of the bigger moves because they're waiting on that they're waiting on the break, and they typically miss it with their indicators.
Okay. Now, in terms of how long have you been using this style of trading for?
I've been using this style of trading for about a year and a half, and I'm honing it and making it better on a daily basis.
Are the results? I know the results for you this year have been tremendous.
Yes,
And
it's actually been better than. I mean, I've had to pull myself back a couple of days that I've traded because my results have been so good that I didn't want to get myself beat up with my confidence. So I actually had to back off some and do some of my hobbies out and about.
So it affects your confidence if you make too much money.
Yes, because it makes you feel, it makes you more confident. I mean,
right, I see what you're saying.
Trader for that.
So you kind of feel like I can't do anything wrong, and you get a bit complacent and perhaps not so focused on. I think all traders have that to a degree. Once you make money, you just think, wait, more to come, and more, and more, and more.
Yes.
So do you do take breaks from your trading then?
Most definitely, most definitely.
Okay. Do you feel that keeps your mindset sharp?
Oh, most definitely. It's a must. Yes.
Okay. So yeah, fantastic results, obviously. I hope everyone found the video informative, and think about simplicity. Yeah, because it doesn't matter what method you use or whatever, but you must have it very, very, very simple, in my view.
Yes.
And then it's just down to the mindset to execute it. So, in terms of, we should have another chat soon, Mark. Perhaps we could talk about. I'm trying to think of what topic we could talk about. Ray Dalio. How about that?
Yes, that I would really like to talk about that individual. He's actually he's definitely one of the people that I've been sort of like encouraged. He gives you very good encouragement.
I must say, I find Ray Dalio very motivational as well. So perhaps we'll have a chat about him. What I'll do is I'll obviously chat to you very soon. So we'll chat on Skype. And thank you very much for joining us.
Okay, Andrew.
Have a good day, Mark. Take care.